Good morning, everyone. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar. Over the course of the show, we'll get you updates from India and around the world, the cues to watch out for during the day, and also the stocks to keep on your radar today. First things first, now speaking of US market, handover seems quite positive on the back of gains in tech shares overnight. Tech stocks were in the spotlight and witnessed a rally following a surprise US tariff exemption from President Trump. The Dow Jones Industrial Average added 300 points or 0.78%. The Nasdaq Composite rose 0.6%, while the S&P 500 added 0.8%. However, it was a choppy session as all three indices at times traded in the negative territory during the session. However, Trump and Commerce Secretary Howard Lutnick have also suggested that the exemptions on phones, computers and chips from the new tariffs are not permanent, stirring up more tariff uncertainty. Still, Apple shares gained over 2% on the news, while Dell jumped nearly 4%. Moving on, let's get you a crude check as well. Now, oil prices rose after a tepid session on Monday, with traders monitoring the latest US moves in the trade war and the prospects of looser restrictions on Iranian crude. Now, Brent traded above the $65 a barrel level after adding 0.2% on Monday, while WTI intermediate held near $62 a barrel. Now, oil has dropped about $10 this month as the trade war stoked fears of a global recession that would hurt energy demand, especially in the US and China, the biggest crude consumers. Now, those concerns have led agencies to cut oil demand outlook and analysis to slash price forecast, with the possibility of a glut amplified by OPEC Plus's surprise decision to bring back output more quickly than expected. Now, the US and Iran held nuclear discussions over the weekend that both parties characterized as constructive. Now, in the first high-level contract since 2022. The two sides are set to meet again in Rome on Saturday, raising the possibility of increased oil output from the OPEC member. Now, on the demand side, OPEC Plus countries trimmed their outlook for consumption over the next 2 years by about 1 lakh barrels a day, following a larger cut by US Energy Information Administration. Now, more banks also reduced their target prices, that is the forecast, with JP Morgan Chase now seeing Brent at $66 this year. Now, while the US stocks and oil have held steady, gold has taken a breather after a record run as risk sentiment improves. Now, the yellow metals price retreated from a record high hit earlier in the day on Monday as risk appetite improved after the White House exempted smartphones and computers from steep tariff on China. Now, spot gold was down 0.7% at $3,213 an ounce after hitting an all-time high of $3,245. The US gold future settled 0.6% lower at $3,226. Now, supporting gold, the dollar was languishing near a 3-year low against its rivals. The trade war between US and China has rattled global markets and driven investors into the metal that is gold, which is traditionally viewed as a hedge against geopolitical and economic uncertainty. Now, remember, Goldman Sachs remained most bullish among major banks on gold, raising its year-end forecast to $3,700, citing stronger than expected central bank demand and heightened recession risk affecting ETF inflows.